Welcome back to this channel. This is Unfiltered Forex, here for the weekly forecast of the week beginning July 10th, which is today. So first, this is the economic calendar. As you can see, let me zoom in. This is the economic calendar, and I've filtered it to show the main events only. So first, we can get that overall picture of what we are expecting this week economically. Tuesday, EIA short-term energy outlook. This is to do with oil. Wednesday, Reserve Bank of New Zealand interest rate decision. You can see the market here is expecting a pause. Core CPI month over month, June. Now here is where things start getting hot on Wednesday, right? Core CPI month over month figures expected to drop a bit from the previous month's 0.4%. CPI month over month, the non-core 0.3%, expected to jump from 0.1%. CPI year over year, this is the headline CPI, 3.1%. Big, expected to decline big time from the 4% we saw last month. Overall, the headline CPI has been on a downtrend for several months now. I think it's 11 consecutive months. Yes, it should be somewhere there. And the market is now expecting these big declines, and we are seeing them with every release. The CPI drops by almost a full percentage point, or even a full percentage point in some cases, like we saw last month. On Wednesday, also, Bank of Canada interest rate decision, 5% expected to hike their rate by 25 basis points. This is an important release to look out for. If you trade the CAD pairs, or if you just trade the majors, USD CAD, I'm almost sure there will be a setup there, and it's going to be good. These setups brought about just before the interest rate decisions, they're usually very clean. On Thursday, GDP for the Great Britain, and then initial jobless claim, and then the producer price index month over month. As you can see, this week, this is the CPI and the PPI. This is a big week for inflation numbers. CPI being the consumer price index, the PPI producer price index, measuring inflation at the wholesale level, expected to increase slightly to 0.2% after a decline last month of 30 basis points. Overall, these are the two main releases for this week, the CPI and the PPI. Other main releases is the Reserve Bank of New Zealand interest decision, this EIA short-term energy outlook, and the Bank of Canada interest rate decision. This Great Britain pound GDP is not exactly that important, but since we're expecting a decline, it's going to be important to look out for. Now let me change the setting to show other events we'll be getting this week. In particular, here I am looking out for the Fed speakers, the Fed members, FOMC members speakers. Monday, yes, today Monday, FOMC member Daly speaks, FOMC member Mester speaks, FOMC member Bostic speaks. The many FOMC member Bollard speaks. Then that's on Tuesday. On Wednesday, FOMC member Mester speaks. So here, looking at on Wednesday is when you get the CPI, and then FOMC member Kashkari speaks shortly afterwards. You can expect a lot of volatility in the market, even as he speaks about the CPI, about the just released CPI. That's going to be very volatile, these speeches. As always, if you want to get these speeches, the calendar of these speeches, you can always go to the Federal Reserve website, the official website. They have a calendar where they highlight the various speakers who will be speaking, members of the FOMC speaking at different times of the week. This is where we are. Monday, July 10th. This is today. Speech Vice Chair Supervisor Michael S. Barr speaking. Tuesday, they're not listed here. Wait, this is something unconventional. Anyway, they're usually listed here. You can see on Thursday, speech Governor Christopher J. Walla, economic outlook. These other ones are usually media interviews. These FOMC members, they are hosted by various media houses to talk about monetary policy, and they do talk, and their words, as you know, they do move the markets. So that's it for this that recap on the economic calendar. There's also another calendar to watch out for. Okay, let's first read this report. This is from CNBC. 3 things to pay attention to in the markets this coming week. Number one, a couple of key inflation measures, the CPI and the PPI, producer price index. Oil prices rebound this week, remain range bound, trading at around $70 per barrel since early May. This is important to watch because efforts by OPEC Plus to reduce supplies have done little to meaningfully impact the prices. As you have seen in the weekly recap, we talked about the further production cuts by OPEC countries. They said they're extending them to include August also, and that that reduction in supply hasn't really done a lot to impact the prices. Number three, Wells Fargo and the big banks report second quarter earnings. Okay, it's the earnings season for Q2 and it's beginning early on Friday. Let's check that calendar. Yes, here we are. As you can see here, most anticipated earnings releases for this week, the week beginning July 10th. On Thursday, we get Delta, PepsiCo. On Friday, this is where the big names are, the big banks are JP Morgan and Chase, United Health Group, Citibank, Wells Fargo, State Street, BlackRock. These major companies, they report on Friday before they open. So this means on the US 30, you can expect big moves. Okay, the general expectation is that JP Morgan might yet again record another record revenue because of the high interest rate environment. So yeah, they must be earning a lot during this in this environment the Federal Reserve has created for them, high interest rate. Citibank, Wells Fargo expect the same story, but it's going to be there are many other things to look out for, especially in the coming week when the earnings season starts off now in full force. Okay, that was it for that one. The next thing we're going to look at is this one, the CME Fed watch. As you can see, current target rate is 5.25 points. This is the current rate, 5.25%. And these are the probabilities the market is expecting for the next Fed meeting, which is in the next Fed meeting in 16 days. Yes. These are the probabilities. As you can see here, the market, 92% of the market is expecting the Fed to raise rates by a 25 basis point hike. Only 7% is expecting a pause, which makes sense because the Fed did say they need to deliver a few more hikes before they say they're done with hiking rates. Even when the CPI probabilities come out, they might not change these probabilities a lot, right? Especially the core numbers. Let's look at the table. Yes, this table highlights various probabilities for the next meetings. This is the July meeting, this is the September meeting, this is the November meeting, the December meeting. As you can see here, the market is still expecting 3 more hikes this year, and the probability of this third hike is quite low for now. If the core CPI numbers, the core numbers, go back here on Wednesday, yes. If these core CPI numbers come in low enough, You can see here the estimate is at 5%, below the previous one of 5.3. If this decline comes out at 5% or as a 5% as the market is expecting, or lower to the side of 4.9, 4.8, that's going to be good news. Going to see some positive market reaction, because seeing the core numbers cool is a good sign. That's what the Fed is watching, the core CPI numbers, and of course their preferred measure of inflation, the PCE. But that one will get it during the last week of the month. So for now, these probabilities might be heavily affected by the core CPI numbers. If they come in good, the probabilities here of this third rate hike might reduce further or get eliminated altogether, because the CPI is the leading inflation measure for the PCE, which is the preferred inflation measure for the Federal Reserve. I think with that now I am done. Something else I should look at, the charts. Okay, there's something here, the euro. I had a setup here. Now let me zoom out. My expectation for this week, yes, is I'm expecting the euro to get to 1.1 levels. These 1.1 levels. Uh, last week when the NFPs came out, the price stabilized at 1.09. Still didn't reach the 1.1 mark. This is 1.09 there. 1.1. These highs, this region here, that's where I'm expecting price to reach before the next big reversal or the next big healthy correction. We're just going to wait to see what the market is going to do. Something else I am looking out for this week is on gold. This is my bias. I am expecting price to do this. These highs around 1980. Yes, I'm expecting them to be revisited, and 1983 thereabouts might be revisited, especially here since this was on Thursday, right? When the ADP came out, price failed to break out past this low. Instead, it maintained this support here and reversed, and then hit this other resistance here, which is quite common at this level, 1930, 1935. Then a retracement, and then probably price is likely to shoot up to 1980s, these regions. From there on, I don't know I can't exactly say what I think price is going to do next, but we'll just wait and see. By that time, we will know if it happens. That is. That's it. These are the two main pairs I'll be watching this week: gold and the euro. Yeah, these are the only two main pairs I will be looking out for in the markets this week: gold and the euro. You see this setup here I had earlier yesterday at night, going good. I'm almost being taken out at break even, but well, if there will be another entry, I might take it again. So that was it for this recap. I hope I have covered all the important stuff to do with the PCE and not the PCE, stuff to do with the PMIs and how this is going to affect this price index, how this price index is going to affect the CPI. I did explain in the previous video when I was talking about the PMIs that were released last week. In the recap, prices 54 increasing slower. Yeah, if you watch that one, then come and watch this one. It's going to make a lot of sense when you see the market expectation for the CPI is this mixed. It's going to make a lot of sense. Anyway, that was it for the week. Now I am done. Have a lovely week.